Good day, friends. Today's video I would like to dedicate to an important topic such as time decay of options, Greek Theta. Many people come to trade on stock exchange just for time decay, in order to get a stable high income with it. That's why I decided to make this video so that you can understand what the income can be and what the risks are. The value of the time decay, the Greek Theta, is one of the parameters of the Black-Scholes model. So, we have an options board in front of us, with put options on the right and call options on the left. For an example, let's take put options at the money, 28,500. The theoretical premium of this option is just over 300. The time decay indicated by the green theta symbol is 91. The theta tells us that this option will lose 91 points of the price in the next 24 hours, if the asset price or volatility does not change. The premium is 297, it will lose 91. But these options expire in 2 days, and as the expiration date approaches, the rate of time decay increases. For example, an option with strike 28. Its premium is 116. In 24 hours, it will lose 72 points in value, if nothing changes. We can sell this option today for 110 and buy it back after 24 hours for 40, provided nothing changes, of course. But you know very well that this rarely happens. Another thing is that in the options board, the theta is displayed with a negative value, because the default value is for bought options. For purchased options, theta always has a negative value. Now I suggest working with a different series of options. For example, with longer-term options. And pay attention to the put option with strike 28. Its theoretical price is 1042, and its time decay is only 17 points. Now you can clearly see how much the time decay accelerates as the expiration date approaches. This is why selling monthly series options is not very popular, as the time decay is very small. In another video I will tell you about Vega, and in this case Vega is serious, indicating a serious increase in volatility. Same picture with the call option of strike 29. The premium of the option is 1,148. The time decay is only 18, less than 2%. Now I suggest we pick a different series of options, an early one. The center strike is 28, 625 is its theoretical price. The theta is 38 points, approximately 5%. Now I suggest we build some kind of popular strategy. For example, a strangle. I will sell 1,000 put options with a strike of 27,500 and sell 1,000 call options with a strike of 29,500. I click on the View Chart button and here we see the following. We can see that the theta has already been calculated. The risk of this strategy, if the price is rising, 1 Bitcoin short. If it falls, 1 Bitcoin long. The theta is 65,685. We divide this value by 1,000, we get the theta decay, $65. So in the next 24 hours, if nothing happens, this strategy will bring us $65. These sold options will lose $65 in value. Theta has its own chart and you can see how it will behave. Right now it's $65,000. In 3 days, it's 73, a week from now, 80. At the expiration date, 0. Now it's time to talk about the risks. Any selling of options means a gamma negative strategy. A negative gamma means that as the price rises, the delta becomes negative, but as the price falls, the delta becomes positive. I have explained what delta is and what gamma is in previous videos. Our reward is the time decay of the options, but our pay is the gamma risk. Therefore, risk must be managed, and measures must be taken accordingly. Measures such as rolling and delta hedging. Let me remind you, that the theta, time decay, is a very variable value. It depends on the expiration date, asset price, and volatility. However, if you buy options, the time decay works against you. You pay for the opportunity to capitalize on market movements with the premiums of the options you buy. And that's all I have on Theta for now. As always, ask questions in the comments, suggest your topics for future videos. If this video was useful to you, put a like and subscribe to the channel. I wish you good luck and see you next time.